Hi friends, Simit here from informedtrades.com. In this video, I want to take a look at a sample trading setup that becomes apparent or that one might take if they're following the basic rules that Steve Primo recommends. Steve Primo is a trader that we've covered a lot of his videos on Informed Trades lately. Just wanted to do this video to sort of sum things up, provide an example of how all the components of a strategy can be put together to illustrate a sample trade. Okay, recap of the key points. 50 simple moving average is the key indicator. When price is above that, you want to look to buy. When price is below that, you want to look to sell. That's the basic indicator of the trend that you want to be trading with. Then you wait for a pullback. So if price is way above the 50 simple moving average, you want to wait for a pullback. Look for signs that the pullback has concluded and the primary trend is resuming. And then you exit when the market appears to be overstretched, which you can measure a variety of ways. Primo uses oscillators as one way to sort of detect this. So here's an example of all those concepts put together. This green line is the 50 simple moving average, so we see prices, basically from this point going forward, we see prices above that, all the way up until here. So we're looking to buy on pullbacks. The market rallies, then we have a pullback here to the 50 simple moving average, and that could be one, if you're looking for clear rules, that could be something, one way of looking at it. You want to see a pullback to the 50 simple moving average. That gives you your entry signal. Or no, excuse me, that gives you almost your entry signal, and that, you've got the pullback. The true entry signal, though, comes when when you have signs that the pullback has concluded. So here, the pullback to the 50 simple moving average, that's the pullback you're looking for. Now you want to make sure the pullback has ended. So you want to see price rally a little bit. It could rally above the candles that touch the 50 moving average. That's one way of looking at it. These candles highlighted here, these blue candles, they rally a bit. Price closes above the previous high, which suggests that the pullback has ended and the primary trend is resuming. That's when you want to enter. From there, in terms of when you want to exit, well, you put your stop, a little below the 50 moving average, and your exit is going to be based on when the market appears to be overstretched. Oscillators below here is the RSI, 14-period RSI, and it goes above 70 right here, which suggests that price could be a little overstretched. So if you enter here, you exit here, I think it's about 130 pips on this 4-hour chart. Not bad. Simple, quick trade. And that's sort of the basics of the strategy. Again, this is a sample illustrating the concepts. Primo uses different rules and has a bunch more to it. You can learn more about that on his website and some of the courses that he offers. But this is just a sample of the components that are part of his strategy. You want to be trading with the trend, using 50 simple moving average as the key determinant of the trend. Wait for the pullback. Wait for the primary trend to resume, and exit when the market appears to be overstretched. So that's pretty straightforward methodology that he uses, and hopefully this trade sort of illustrates that, how it can be applied to the markets. That's about it. If you have any questions, anything you want to add, join us at informedtrades.com. Thanks and best of luck in your trading.